Hi, this is Randy Finney with Right Side of the Chart. This is a mid-session update for Friday, August 20th, 2021. We'll do out in this video is a quick update on the major stock indexes, and I'll include the small caps in this one. Lately, I've been just covering the large caps, SPY and QQQ. So we'll hit on IWM and the small Russell 2000 futures. Quick updates on AMC, Bitcoin, natural gas, crude, gold, lean hogs, corn, and coal. Covered the coal stocks yesterday. Maybe sugar if we get to that. So very much a mixed bag of various trade ideas, whether it be commodities or equities, things that I've been looking at lately. Okay, so I won't spend a lot of time on SPY and QQQ because I talked about it quite a bit yesterday and also gave you the charts this morning. But that's it. We still need to take out the bottom of that support range, and on SPY that comes in at 4. I had the line at 435.93, so I'm just that's the magic number. We hit it yesterday and bounced, and need to take that down. The intermediate and longer term trend is bullish. That's these series of higher highs and higher lows, while the near term trend is bearish, and that is this high right here was a divergent high, and we've been stair stepping lower since. So ideally, for the bearish case, you'd want to see SPY reverse soon, and again, ideally below this previous reaction high right here, come on down, and of course then take out that 435.93 level, and if so, that should open the door up to any or all of these potential targets right there. QQQ, similar story yesterday, hit the bottom of the support zone, and then bounced right at the open. You have a little minor trend line right here. I have it on the futures too. Maybe I'll get to that in a second. Little potential trend line right there. And again, ideally for the bearish case, you want to see that. If we break out to the upside, is it bullish? Well, very near term, yeah. Anytime you take out a resistance level, again, that's just a minor trend line, but it's not going to change anything technically. It won't change my outlook because you'll just take this divergent high right here and you extend it until and unless we go up a lot higher and then are able to burn through these divergences down here. So that's that. And again, let's not even talk on it unless we get a reversal and then take out 360.56. Focus our efforts elsewhere right now. Elsewhere would be, I told you I'd give you an update on IWM. IWM, the bigger picture is this. It has been locked around in a trading range the entire year. So unlike large caps, which have been kind of grinding around but inching higher, the small caps have not. Here's the beginning of the year right here. There's January. So shortly after the year began, really in February, popped. Well, actually, no. I take that back. Here's the range. We entered the range in the beginning of the year. Extend that box. And since then, it's been just like an EKG, bouncing along top to bottom. So and it's not a predictable pattern, but it's pretty simple stuff. Now, this is not going to last forever, but as of now, the MO has been to be, long or cover shorts at the bottom of the range and sell your longs or go short near the top of the range. But again, it's not super well defined, and it's certainly kind of a mixed bag in there. Not you don't hit the bottom and go straight to the top. Sometimes you pull back. But I also notice here, and I notice this quite often. I share this on the site all the time, that whenever there's a price channel, whether it's downward or upward sloping or sideways like this one, quite often I can put a midpoint line in there, and that midpoint line will act as resistance when tested from below and support when tested from above. And right now you can see we have a lot of reactions there recently. So if we do bounce off the bottom of the range here, that would be the first resistance level, a level we might get a rejection, you maybe target or trade off of. If you break it, you typically then go to the upside of the range, and obviously an upside break would be bullish, although just like those 60-minute charts I showed you, if it happens anytime soon, we're still going to have these big divergences that have been building on the daily chart for a while. So for me, it's not going to change much. It would take a lot more than a marginal new high to change the technical posture of IWM. And because of those divergences and the fact that we're at the bottom, we're not at any even close to a risk of a breakout right now because the top of the range is way up there. So at this point in time, you're very close to the bottom, and whether you're bullish or bearish, you want to be on guard or on alert or look out for a break of the bottom of the range, because that would be quite bearish. I always talk about these ranges as acting like energy, building like a coiled spring. And so a downside break, and you can see I don't have a target on IWM until 170. That's my first support level, and that is because you probably can't make it out on the video. I want to just kind of move through this. These are the volume histogram bars. They come all the way out here. That tells me they're on the left here, all coming off the left margin. There's bars all in here, and it says this has been the majority of trades over the past year and a half, 2 years have taken place here, and it only makes sense because we've been in that range. And this move down here, I'll turn them up for you. So I'm talking about it, and if you're not familiar with those, there they are. That shows you from this breakout above this level, there was a lot of consolidation going on, and we broke out. This was a swift move up, and not many people bought it. The volume, relatively speaking, was quite low, and that works almost like a gap, those thin zones, and so therefore that would be my target. And that's a pretty aggressive target, maybe to some, but if we break that range with conviction, you're talking about an almost 19% drop right there. Yeah, right about 19%. And you'll also break, here's the 200-day simple and 200-day exponential moving averages, which we just hit. I don't know if you can make those out. So that's what's going on right now. IWM is testing close to the bottom of the range as well as its key 200-day moving averages. And let me turn these bars off and move that down and show you something real quick, and then we'll move on. All right, this line, right, I just put up as a custom indicator I created to show me when a security, in this case IWM, the Russell 2000 small caps, when it's trading above or below the 200-day. So it's very simple. I have a line here that when this yellow line is above, the IWM is trading above its 200-day moving average, and I talk about this often. That's a key moving average, and it's a lot of traders will watch those. And when you're above it in a bullish trend, pullbacks to the 200-day often act as support. You can see that, and if you bought, it told you, hey, we're in a bull trend. Buy pullbacks to the 200. Then you broke it right here, said bearish, and then just like it acts as support from below, or from above, it acts as resistance when tested from below. So you broke down, you back tested, it hit the 200 days right there. I think this is the exponential I have up, but they come in close together, and then boom. And so this was one of the biggest bearish trends in years. That was late 2018. Kind of had some choppy and messy consolidation here, so you tend to back off it. It's not going to, when you're chopping around and trading on the 200s, you're going to get whipped to death. So you step back, don't put too much into those, wait till you have a clear trend emerge like this and you're clearly above them, and then boom, you broke it again there, and that was your signal. Hey, get out of Dodge. Dropped out, clearly took out the 200 days, and if you did, you sidestepped a 30-40% drop in the small caps right there. And then that's it. We regained it here and back tested it right there, and that's it. So I just wanted to point that out. This would all kind of take place together if we get some pretty decent downside anytime soon in the small caps. You'll have, like I said, very well defined, well watched price support broken, which in itself will trigger a lot of stops on longs, bring in the shorts, as well as the drop below the 200, which fires off a lot of algos. Buy and sell sell programs, things like that, and other traders watch that. So that's that. All right, let's move on. In no particular order, I'll just rifle through those other securities I mentioned. Here's Bitcoin, right back at that, give or take, that 39.25-ish resistance level, and that's after hitting the first short target off there. And so there it is. So we keep running into that level and failing. Obviously bullish if it can clearly take it out, bearish if you get another rejection. Certainly offers another objective short entry there. And if we do get rejected once again off there and start to move down, especially if we come on down to my second target, you're going to get a bearish crossover on the PPO, a high level bearish crossover on the PPO. That'll be the first one in a while, so something to watch for there as well. Next up, let's look at gold. Let's jump over to gold real quick. I like to use, well, at least for the near term outlook. You guys know my opinion on the longer term outlook, but near term, this is that big support zone right here. And the bottom of it is right there, about 1795, I believe that is. We took it out there, had that big drop, hit a lot of stops. Uh, Quite likely a washout move in gold, and if that's the case, it's going to be longer term bullish. What I mean by that, to wash out weak-handed longs, and then you get a more core solid holding. However, there's work to be done, plenty of work to be done. This was a multi-week trading range right there, and so number one, you have to penetrate the bottom of it, and if you do, and then you still have to take out the top. But if you do that, then quite very likely that my third and fourth targets will be hit. Again, whether you want to call that a continuation, same trade, that short-term trade on the 60-minute charts should have been stopped out all day and then some on that breakdown there. But again, I'll just leave those there because they're still valid resistance levels to target. But again, that's what gold needs to do. It's been consolidating just below that level there. I have some minor support levels here, so you need to break above this range for the bearish case, and downside break, obviously, that's not going to be good. AMC, I just, you got to give those apes, they call themselves the, Reddit bulls that think they're going to engineer the mother of all short squeezes on AMC. You got to give them credit for holding it up. They call themselves diamond hands, meaning, it's the opposite of weak hands. Weak-handed, someone that gets shaken out of position easy, and they call themselves diamond hands. Well, look, they're holding it up, but yeah, the fundamentals, obviously we all know that, even they know that, are garbage on this company. But I'm going to speak to this again. I said it once recently. Okay, so if AMC had any kind of shot, fundamentally, it was that COVID, up until just recently, was abating. The economy was coming back online. It was coming back online very hard. People were starting to go to movies again. Now this Delta variant, as you guys all know, I'm sure, unless you've been living on the moon, is extremely contagious. Cases in many counties and states and cities are actually higher than they were at any time in the epidemic. This is an extremely contagious variant, and it's also disproportionately hitting younger people now, and maybe that's a function of the older, 60 and older group or vaccinated mostly. But where I'm going with that is from a fundamental perspective. If AMC had a chance, it was so people start going back to the movies, and now you have both their demographic, which are your younger audience, was pretty much, they figured they were safe from it before, generically speaking. Now they're getting hit. They're on ventilators. They're actually, younger people are dying or getting very sick from this, and cases are exploding. So fundamentally, that doesn't help AMC. Technically, same story. I had support here on the daily at 36. We're still below that. I mentioned that bounce backs to 36 is objective shorting ops, and that's been the case. We recently broke the little trend line there, failed that 36 level, moving lower, and I fully expect this to continue down to my second target zone, and ultimately all these targets to be hit. 60-minute chart, however, my magic number, I'm going to keep doing this to make it simple, color coding everything. Magic number remains right now about $29 right there. That's the support level we've hit a couple times. You can probably see the volume price histogram bars here. They're really big up to this point. They run out to right here. That means this is where majority of the apes, or those that are currently in this one, strong-handed longs, holding on to it. And once you crack that 29 level, it's very thin down here. Very few bought on this move up. Your first support comes in here about 14.58, and that's my third target here on this 60-minute time frame. Not to be confused, often have different targets on different time frames. So that's that. And look, it's going to be frustrating whether you're long or short until we get that breakdown, or something else happens on the upside. There's a potential trend line. But let me move on. So that's just want to kind of give you an update and reiterate that level there. Next up, I will cover natural gas. Natural gas has this uptrend line, which we briefly spiked below, but as I mentioned the other day when I threw it out as a long trade idea after it being a short right here, short there, and then hit our price target here. I said you either cover or you can reverse and go long. And with a stop somewhat below 3,743, because that support level was a good support level and it was just below the trend line. That's what happened. So we had just a momentum fueled overshoot. whipsaw signal and then rallied up, and then we just hit that 349 resistance level there. Where we go from here, be careful. Another break of the trend line, especially 374, we could go lower, and that would open the door to down there. I played a few quick trades in and out, and now I'm out at this point in time. So I don't have, it's just telling you a function of my convictions are not very strong, even though it did recover that trend line. So I was able to get it up there and then reverse a little thing here at resistance today, and just wanted a quick pop pull back, and I'm going to set aside for that one for right now, stand aside, but I'll continue to update it because I know people, I love trading natural gas. It's that probably the most volatile commodity out there, meaning you can, in just a couple days make 10, 15, 20% on this thing. Whereas, something like gold, it might take you 2 months to get 20% on it. Alrighty, and then a related note, CL, still my favorite long-term trade, and whatever, just moving lower and looking good. And like I said, this was to me, a big support level that was broken, about 64.89. We're below it, and they're continuing to sell the little rips, potential divergence, but again, I'm letting the longer-term charts formulate my long-term, trading plan or outlook for this. You know me, I'll play counter trend rallies and rips and dips and bounce off support and resistance. But if we're getting to that point now, as I told you, I think it's a point of recognition where I think it's becoming clear to all that crude has topped and may go down quite a bit more. And so I'm not as interested right now at this point in gaming as I was here, the counter trend bounces. Especially because I don't have support right now on the 60-minute chart. We did have SCO hit that resistance the other day. SCO is the 2-time inverse, but as of this point in time, I don't see really any support nearby on crude. So holding on to the shorts. And there's your SCO. When we've taken it out, remember we consolidated on there yesterday at that first target, but now we're above it. You look closely, that candle's above it, so that opens a door for a move up to T2. T2 zone, and I still think T3 is likely. Again, that's if you're an ETN trader and you don't trade futures. And if you do, remember I've mentioned this many times. Maybe you want to trade futures, but you want a smaller contract size. You can use MCL, which I believe, if I'm not mistaken, that's the mini, MINY. They call it mini crude futures. And then QM, if I'm not mistaken, is the micro, or one, oh no, that's micro right there, I believe, and that's the mini. And they trade on the same exact price levels as the CL charts. They're just smaller leverage factors. So, you can get your feet wet in futures or layer in if you don't want the, big contract size that CL has, big leverage factor that is. Okay, and crude had bounced earlier, and it faded those gains, and with the bounce, a lot of the coal stocks bounced, and a lot of them hit support. Remember I told you that this one, BTU yesterday, triggered an alert, but then snapped back before the close, so we're still above trend. And so while I do have several of these, as I mentioned in the video yesterday, already breaking down and giving sell signals, there's still quite a few, and in fact the majority have not yet. So that's what we're looking for. So no reason to update them. They're all green today except this one here, but this one's already been in a downtrend, and this one was really not one of my favorites charting wise. AREC, that's the only one I'm seeing right now that's down. But with that being said, still one of my favorite sectors, and a lot of setups there, meaning trades where the train has not left the station, nor are they actionable yet until they trigger sell signals. All right, so let's see what I covered: Bitcoin, AMC, natural gas, crude, gold, coal, and let's look at HE. All right, for your futures traders, this is one of my favorite commodities right now, because every commodities have been, they're still in a bull trend, but there's been a lot of corrections, and as I've talked about lately, I've been in hit and run mode in a lot of the commodity trades. Wheat, corn, I mean, we've been in and out, long, short, things like that, soybeans, and again, so it's more of a, when you're in the consolidation mode, then I kind of switch gears instead of buy and hold, more to hit and run. Hit and run is in and out within a few days. no more than a couple weeks. And so there's the bigger picture. Within there's like a small wedge right there that broke down, but this is the trend line. And what I did is I added this level. I noticed there's just recently we have several reaction highs there, and it's about 89.37. Well, it's exactly 89.317 is where my line is, and so that's the level that I think needs to go. So I'm holding off. There is a breakout above the trend line, and you could have taken that, and if you did, you're probably fine for now. Like anything, don't get married. If the breakout fails, you need your stop at least below that reaction low at minimum, because that would clearly be a rejection there. There's a gap right there to trade. And if you want a little more evidence before going long, we're starting to move through there, but once we get a solid 60-minute candle close above 89.317, that should do the trick. And I'm not sure if I had, no, I don't think I did have targets for you before, but here they are. I'm more apt to kind of just trail up stops, let it run for now. But if you want some near-term targets, 91.70 or 91.708. 95.582. That's again, we're looking at a 60-minute chart. If I zoom out a little farther to the 2-hour candles, you can see the same pattern. There it is, our bullish falling wedge. There's the breakout, and there's that little minor resistance. So again, it is a breakout, but if you want to play it safe, it's going to look even better if it can take out the those highs right there, today's highs, and then move on up. And there's your targets right there, all the way up to about 99.106. Okay, and we'll just quick update on corn, because I threw out corn and wheat the other day, and I said I liked corn better than wheat in this last trade, last instance, and it broke out right there. That was the level we needed to break out. There was our breakout, and we hit my maximum target right there. There's a reason why if you zoom in real tight, it might have been just a slight hair below that. And again, I'm giving you actual resistance levels. You always want to sell a little bit below, have your sell limit order below the actual resistance, just in case security, because it's not uncommon to reverse just shy, just like you can overshoot. But why risk missing a trade, an exit, an optimal exit for just a fraction of percent? So that was to me a perfect at least exit on that one. And then look at the reversal then. And then look, fell back below that 588 level, 558 level, and now just took out the bottom of that recent trading range there. Although there is a reaction low here, but I have no opinion on this now. Again, I'm just highlighting that as an optimal exit. Those were all our targets on the way up. Hit that max target, and this is what I'm talking about, hit and run trading. When you see a chart like this is not a trending security. This is tradable if you get in, get out. But right now, better off in doing these hit and run trades than trying to position or trend trade. But I will say, if you go back, if you are trend trading and that's your thing, you go back to corn and wheat, for example, there is that trend line. Oh, I didn't realize that got taken out today, so that's no bueno. Okay, so I'm glad I updated this. It's taken out. There's that trend line. I said before, you can buy pullbacks to it, but we've taken it out, and that opens the door now for a drop down to 1917, and that would also be an objective entry with a stop somewhat below that. But that is our primary uptrend line as of now, and it is broken as of this moment. Take a big reversal. I don't think it's going to happen. I think corn, like wheat, they stop trading earlier in the day. They don't run till 4 o'clock. So this one's probably done. That's a breakdown. Probably head down lower. If it doesn't hold 1917, if it breaks that, that's a pretty big support shelf. 1744. So that's right now no bueno for corn. Let me look at wheat too, because I know they tend to move together. Let me clear these lines and look at wheat for you. Wheat's well above its uptrend line. This is here. No, I have it right here. There's the uptrend line here. I'll turn off all the lines so you can see it better. There's your primary uptrend line in wheat. But wheat just put in pretty big divergent highs, so there may be some more downside coming. And same story, if wheat comes and visits that trend line again, it'll be a nice correction within a bull trend, and that's where you'd have an objective buy point. So, but near term, I wouldn't be surprised at all if we don't have more downside. And again, that would be your next buy point, the uptrend line. And last but not least, quick update on sugar. Sugar recently put in a little bearish rising wedge. Broke down from that wedge when I was queuing up the video, we were above this level. I was going to point that out as a level. If we break it, we're probably going to these next targets, and it did. That level's 0.1966. That was support right there. Took it out. That means we're probably going to head down here at least that 1932 support, and most likely, I think, come on down to this primary trend line. So, if you happen to be short, I don't think I laid this out as a short op recently. I just want to update it. Whether you have a position, don't want to have one, that would be where I think this thing is going. So if you're short, maybe come down the trend line, cover there, or reverse for a long position if the charts indicate. So I don't always go long on drops to support just because we're at support. Sometimes support gets broken like it did here, and it could here. Go long if there's a case to be made. For example, maybe we have some positive divergences when we get there, and some other things like that. But yeah, and there's some price support as well. So that's what I'd be eyeing for sugar if and when it gets there, looking to go long right there. All right, that's it. Let's wrap it up here. And if I see anything else by the end of the day, I'll get it out to you. And if not, have a great weekend. This has been Randy Finney with Right Side of the Chart.